Hello, everybody, and welcome to another installment of the Global America Financial YouTube channel. I'm Rodolfo Sierra, and today we're going to learn how to run the IUL illustration software for National Life Group /LSW. First steps first, go to www.nationallife.com. When you go there, you'll have a login screen on the top right. You look for your username, enter your password there, and you can log in. And that takes us to the back office of National Life Group. On the left side, under Business Tools, we have Illustration. You click on that, and that will open up the illustration software system here. All right, under Activities, we click on New Illustration, and that gives us a pop-up screen to start the new illustration. So we want to make sure we pick the correct state. So today we're working out of Texas, so we'll select Texas as our issue state. I'm going to select the correct product. We have term, IUL, annuities, and fixed universal life. Today we're talking about indexed universal life. We click on that, and the different sales concepts. We're going to focus today on basic illustration. In future trainings, we'll go over all different types of education funding, executive bonus, and other supplemental retirement plans. All right, and under product selection, we're going to choose our FlexLife II. That is the flagship product for National Life, and that'll be the focus of today. All right, so now we get a pop-up screen of the actual illustration software here. And the first page is entering client information. So always verify you have the correct issue state up here. And if you need to make a change, that option is there for you. So let's work with our John Doe. That'll be the easiest client to work with. So we'll start with that, and let's leave him as a male. Let's make him a 35-year-old. So let's change the date here by 10 years to 1982. All right. Next information we enter is our risk information. So we have to select the rate class. We have different types of rate classes here. Typically when we run these illustrations, we try to focus on just the standard rate class. That way we under-promise and over-deliver in these policies. Now, of course, if you know the client is extremely healthy, then you can select a higher rate class. But for me, I always go standard just in case. You just never know what can show up in blood work. If you want more details about the underwriting process, National Life Group has a great link right here, Underwriting Guidelines. You click on that, you get a pop-up screen, and you get all the details you would ever want from underwriting. Under table rating, we leave that as none for now. Typically, we use these only when we have to re-quote somebody based on underwriting coming back with some unfavorable results. Flat extra, we leave that blank. Against underwriting, we leave that as none. Ownership type, we leave that as same as insured. The only time we change this option down here is whenever we run a quote for a minor or a juvenile where the parent has to be the owner and the child has to be the insured. But for the example today, we'll keep it same as insured. All right, the next section we go to is our death benefit and funding. First one is tax and compliance. We leave these as is. We leave the guideline premium test alone, and we leave the MAC avoidance as none. Next one is face amount. We have three different base law types. We have none, minimum death benefit, max cash value, and based on target premium. The two that we use the most are none and minimum death benefit, max cash value. For example, today we're going to go with the second option here. That way we can figure out what's the max amount of cash value we can get from this policy. Under death benefit option, we typically have two choices, level and increasing. For example, today we'll choose a level. Under premium amount, we have a few options. We can do a first-year lump sum, but again, on average, most people don't have that, so we leave that as 0. We have a premium mode option, so there's different ways you can pay the premium. You can pay it annually, semi-annually, quarterly, or monthly. Most clients tend to go the monthly route, but there are some that go annual. Just make sure you have the right selection so we can quote them properly. Example today, we'll go with monthly. Under premium amount, we have options for different types of premium payments. We can do a target premium, a specified amount, a minimum amount, guideline annual, guideline single, and 7th day. Majority of the clients typically we work with go with a specified amount, and that's what we'll go with today. On average, our clients pay about $500 a month for their policy, so let's start with that at $500 a month. On the adjustments, we leave that at 0. On the from through button here, what this means is from what time frame are you paying this policy through what time frame? So if we start today, which is year 1, we enter that, and then we do a dash, and we enter A66. What does that mean? That means that they're going to pay this policy $500 a month from today through age 66, age 66. All right? Then we tab over. We leave the 1035 exchange as none for the most part, so we'll leave that blank. On distribution, we have different options. We can either distribute money specifically, tell them I want to have this X amount coming out from the policy. We can let the software system solve automatically for income, or we can do lifetime income benefit. So let's take this example. Let's just go with solve for income, because that's typically what most people are going to want to see, and most agents will like to run it this way. Under adjustments, we leave that at 0, and under the loan methods, we can choose either loan, withdrawal, or switch to basis. Majority of the time, if not all the time, it's going to be loans, because loans come out tax-free. So we'll leave that as is there. On the from through screen, you can see that it automatically defaulted to A67-M. That means that at age 67, we'll be able to draw some income from this policy through M, which is maturity, which pretty much is a polite way of saying when you die. All right? On the loan type, we have 3 options. We have fixed loans, variable loans, and standard loans. So let's take this example today. We're going to go with fixed loans. All right? And fixed loans with the new FlexLife II is guaranteed to stay at 5%. The next 2 sections are loan repayment and solve. We leave these as is. We don't touch these. These are for more advanced trainings and other advanced illustrations. So for today, we'll just skip over those. The next section is the rider section. Again, typically we leave these alone unless we know we're going to add an additional rider. As you can see, we have a lot of different options here. The one that we use the most is either a children's term rider or other insured riders. Okay? So for this example, we'll leave these as is. And under the ABRs, the accelerated benefit riders, we have the ability to make changes on the dates so that we can quote different ages. But again, these are defaulted. We usually leave these as is. Next section is interest rates. As you can see, for LSW, we have 5 different indexing strategies, 1, 2, 3, 4, 5, and we have a fixed term strategy. And we have the ability to allocate the premium payments into whatever buckets we choose, all right? Keep it simple. In this example, we'll just keep 100% on strategy 1, just to kind of keep going through this. And you can also see the assumed rates that are being quoted based on these strategies, okay? If you want more details on the interest rates, there's a button on the bottom left here, and in the middle of the page, the strategy, allocation, and rate grid. All right, so now we're ready to take a look at Quick View. Quick View is a quick snapshot showing us a brief idea as to what these numbers could look like, all right? So we said that we're going to pay $500 on a monthly basis, and with that, that gives us a death benefit of $510,389. And you can see on the next line here all different types of premium payments, all right? The main focus just needs to be on the modal one, which is $500 a month. Let's scroll down. As you can see here, starting at age 35, he's paying $500 a month, which is $6,000 a year into the policy. He continues to pay that all the way down through age 66, all right? And as we scroll down here as well, we can see the accumulated value continue to increase, the surrender value, and of course the death benefit remains level because that's the option that we chose. So as we get to retirement at age 67, he's paid $6,000 a year into this policy for 32 years. He is now able to pull out potentially up to $48,863 of tax-free loans against this policy, all right? And he can do that every single year until the day he dies, assuming the policy continues to grow at the pace that it's growing at, all right? That comes out to about $4,000 a month. Not bad to supplement your retirement. Next screen is our report screen. All right, here's where we actually get to see the report that we will present to our clients, okay? These are all already pre-selected, so I would usually just click on the Run Reports here. And when you go to here, we'll get a pop-up screen. That means that the policy is loading and being processed. So while we wait for that, let's go through a few more buttons here to give you an idea of what to look for on this last page of the illustration software. We have the iGo eApp submission. So you have the ability to go straight into the application itself by clicking this button here. And we'll go through that training at another time, but know that it's there. And then we have the ability to save our reports, okay? I typically like to go save as. That way I have an idea of what I'm changing from client to client. So we click on Save As, and we can name it. You can name it John Doe. And I like to do just a little recap summary just to give you an idea of what I'm looking at for each client, right? So I like to do maybe like $510,000 death benefit at $500 a month, and then we have the $48,000 in income, right? So that just gives a quick summary. So if I need to go back to it, I know exactly what I'm looking for. We can save that there. And it looks like our illustration has been processed. So let's click on that, and it pops up a screen here. And voila, there we have our life insurance illustration prepared for John Doe by Global America Financial Brokerage. All right, and we'll go through this through another installment of our YouTube channel about exactly how to read these illustrations so you can be compliant with your clients. But just to kind of give you a quick summary of what we did here. So for Mr. John Doe, we purchased that $510,389 death benefit issued age 35. He's paying $6,000 a year into the policy, which is $500 a month. We have the ability to receive tax-free income, being age 67, of $48,863 a year into the policy. And then, of course, you have the living benefits that LSW provides: terminal illness protection, chronic illness, critical illness, and, of course, critical injury. All right? And that's what makes these policies so powerful, the ability to have a death benefit with living benefits, and then the ability to potentially use tax-free income from these policies. All right. So that kind of summarizes the illustration software for National Life Group /LSW. Please subscribe below to continue to learn more about different types of products and different types of softwares that we like to use in our company. Again, this is Rodolfo Sierra with Global America Financial. Thank you so much for listening, and you have a fantastic day.